Good day, everyone. I welcome you especially to my YouTube channel. If this is your first time joining me, basically, this is my first video. Well, I welcome everyone who is watching this video, wherever you are, your time zone, wherever you are joining from, wherever you are watching this from, I welcome you. A quick story. I've been a forex trader for 2 years plus now, but I didn't really trade much strategies compared to other starters in the forex market. I only traded like the basic strategy of being a forex trader, and that was like called support and resistance. And I just paid a particular mentor to teach me other block. And afterwards, that was it. Before I learned and mastered this new strategy I want to teach you guys, or I'll be teaching you guys on my YouTube channel. And I'll be posting some of my results on my YouTube channel. So follow me as I embark on this journey. But let me give a disclaimer here. The forex market is not a get rich quick scheme market. No. Believe me when I say this. Believe me when I say this, a lot of consistency and persistency is required. My God. It is extremely required. We can't overemphasize that it is extremely required because the market will do you small and then likely want to give up. But I want to admonish you don't have to give up. It will over time pay you. But I'm teaching you a strategy I've called structured liquidity and key level. It's called the SLK strategy. Well, I'm not the inventor of the strategy. It's just that I learned it and then I owned my own system in the strategy. I don't know if you get what I said. What I meant is that I just basically coined out the one that works for me amongst all of the various things they taught us in structured liquidity and key level. And then this is what I'll be teaching on my YouTube channel. Now, sometimes I'll be doing a live section, post some live trades. Well, not on my YouTube channel, but on my Telegram platform and on my Twitter. So if you want to join, just do what to join the links that will be attached to this video. Alright, so structural liquidity and key level. To be sincere, this is a very simple strategy that anybody can understand. Anybody can understand. So let's start with structure. Everybody knows structure. Basically, in the forex market, we have three kinds of structure. We can call it two types of structure. We have the trending market structure and we have the ranging market structure. Trending market structure. The first one is trending market structure. Trending market. Trending market structure. Trending market structure and the ranging market structure. But under the trending market structure, we have two types of trending market structure. We have the uptrend market structure. We have the uptrend market structure. Let me just include it here. We have the uptrend market structure and we have the downtrend market structure. So I'll just type it as A here. Uptrend market structure. Uptrend market structure. That's why I initially said we have three because a lot of people just call it uptrend market structure and downtrend market structure. They're actually right. I just decided to impute mine like this, so we are basically still saying the same thing. I'm going to be teaching you all about the strategy I trade here. So please do want to share the links with your friends and let's journey the market guy because there's no need of keeping all of these things. Yes, so people pay for my mentorship, and the difference between paying for my mentorship and watching my YouTube channel is the fact that you have the privilege for me to hold you by the hands. You can send me your trade setup and I can easily look at it and tell you that, oh, I don't think this is going to play out. Or based on what I know. Trading is a game of uncertainty and probabilities. Nobody is called it. Nobody is the market maker. So, but over time, history repeats itself. Life is cyclical, the same way the forex market is cyclical. You can be assured that what has happened in the past can also happen in the present, and you can follow that same pattern. That's basically what we do in the forex market. All right, so we have the trending market structure, which is comprised of the uptrend market structure, the downtrend market structure, and the ranging market structure. Now, the truth is, if you can understand structure, you will get this strategy very well. And structure is not difficult. Trust me, structure is not difficult. Now, for the uptrend market structure, uptrend from the word uptrend simply means the market is going high or going up. Sorry. Another word for instance, we call it bullish. If you trade cryptocurrency, you will know I will say Bitcoin is bullish. Uptrend market structure, that's what it means. That the market is going up. Downtrend means the market is coming down. Now, please understand that the market does not move on a straight line. The market moves in a zigzag manner. And every trader needs to understand that the market moves in a zigzag manner. The market moves in a zigzag manner. So when we talk about uptrend, it means the market is going up, coming down, but the overall trend of the market is uptrend. This is what I mean. Uptrend is like this. This is a zigzag manner, not a straight line. When we say market is moving in an uptrend, it simply means the market is creating what we call higher highs and higher low. Before you can say market is in an uptrend, two things must be in place. You must be able to identify your higher high, and your higher low. I'm making this thing so simple in case beginners are watching this video. Higher high and your higher low. For an uptrend market, you must have your higher high and your higher low. Now, where is your higher high? Now, this zone is what we call your higher high. I will represent it as double H. This up part is what you call your higher high, and this lower part is what is called your lower low. Sorry, your higher low. Sorry, I'm already going to downtrend. Your lower low. Your higher low, please, please, please. Your higher low. So anytime you call a market an uptrend, you must be able to figure out these two parameters. It must have higher highs and higher lows. Higher high and higher low. So you can see again, this is our higher high, this is our higher low. And for a market to be in an uptrend, the higher low must not be taken out. The higher low must be expected. What I mean is that the way it is like this, it is respected. The next higher low must not go below it. For instance, if it goes below it like this, we can likely doubt it if it's in an uptrend market, except otherwise. Except market now gives us another higher high and forms another higher low, then we just know that this one was invalidated, and then this is now the new higher low. But for a market to be in an uptrend, the higher low must be pre-expected, and the higher high must always be taken out. The previous higher high must always be taken out for a market to be considered to be in an uptrend. So you will have continuous formation of higher highs and higher lows for a market to be in an uptrend, to be termed as an uptrend market structure. And this is one good thing about trading. When the market is in an uptrend, don't try to sell. Don't try to sell. Don't bother trying to sell. It's always good to go in the direction of the market. If the market is buying, do well to also buy. Now, for the downtrend, this is the first part of this video. It's not going to be long. The downtrend, you can also do well to watch more videos on market structure. Downtrend market structure. Downtrend market structure. Now, downtrend market structure signifies that the market is bearish. For those who trade crypto, market is bearish. That means sellers are largely in the market.